Jesus Gonzalez, how you doing?
Hey, Jason, how are you?
Good, good.
I like your hat.
Thank you. Appreciate it.
Looks very sophisticated.
Well, I'm not sophisticated, but I'm glad my hat is. I guess we'll wait just a minute to see if anyone else hops on. We don't get a lot of people that actually hop on the webinars, but we do get a fair amount that watch the recorded version later. So we'll be sure to send out a recorded version. Hey, Taylor. Well, let's jump into
We all get a recorded version later.
Yeah, I'll
Okay,
shoot out a
good.
recorded version. We don't get a lot of people that hop on live, but usually 200 or 300 will watch the recorded version after. So
Yeah, I like to have the recorded version, but that'd be good.
yeah, we can send that out to you. All right, so we'll do the same format as last time, where I'm just going to kind of go over the research, talk about the current market in Orlando and Central Florida. And if you have any questions, feel free to drop in the chat or you can email me, or if it's just the three of us, you can just ask here. That'll be fine as well. Feeling a little under the weather today. I've been running a fever the last couple of days. So as soon as this is over, I'm going to be head to bed. All right, so I think most people at this point are familiar with our upfront rent program that we're now offering. If an owner chooses to participate within a couple of days after the tenant signs a lease, we'll cut them a check for the lump sum of the entire year's worth of rental income. So we partner with a third-party company who has $500 million to work on this. So there's plenty of funds available, and they are going to take a cut from the rent. That's their for their risk and for their them fronting the money. But the benefits to the owner would be if you have a better place to invest that money, or you need a down payment on a new property, pay down some credit card debt, whatever the case may be, you can get a lump sum of $25,000, $30,000 right there. Another benefit would be that if a tenant is ever late on rent, or they don't pay rent, they vacate the property or get evicted, it's not the owner's problem. We have to deal with that. So there's a chance they could have lost some funds if any one of those occurred as well. And maybe the big thing is, if you got a check for $25,000 or $30,000 tomorrow, in theory, with the way the rate of inflation is going, it's going to be worth a lot more today than it will be a year from now when you'd actually get those funds through the normal course of rent collection. So just an option. There's no obligation to do it, but we do have the upfront rent program. And we also have our property performance dashboard, which was created in-house by Ben, one of our owners. The software program is going to show all the calculations and numbers that an owner wants to see, from cap rates to ROI to forecasting models, appreciation in the home, equity in the home. It's going to give all those numbers right there in the dashboard. So, an owner doesn't have to worry about handling their own calculations, their own spreadsheets or whatnot. It's going to be there. It's also going to have a leasing page that will show what the traffic is like to the property, how many showings, how many applications, how many leads. So you can see during the vacancy process what's going on with their property. And then there's a maintenance page as well. It's going to show all of the inspection reports, any repair bids, photos from the property, anything they need maintenance related is going to be right there.
Where did you see this, Jason? Where is this at?
Yeah, it's called the property performance dashboard. So any property that we're currently managing owners have access to this. And so it's going to be a dashboard that nobody else in the country offers, but it's going to be very informative and helpful to see where they're at with their investment. Maybe it's a good time to sell, maybe it's a good time to hold on to it. So that's available to every owner. And if you want more information, feel free to shoot me an email and I can get that out to you. We also have the not necessarily, we're not pushing it per se, but the refi till you die campaign, where if you, rather than selling a property, just keep a hold of it and continue to refi it over the years. Because the rule of 72 applies, stating that your property should double in value every 7 to 10 years. So if you were to do a cash out refinance, take the equity and go buy another property and continue to do this for the life of the property, you can end up with 4, 5, 6 other homes. So instead of the old school method of just paying down your mortgage until you own it free and clear, now you have an opportunity to own 4 or 5 different houses. And if you want to know more about that, jasonhartman.com is the great source. He came up with the theory, and there's a good podcast on his site. It's very detailed talking about this. But in terms of the market update, right now, home values in Orlando as we speak, the median home price is $438,000. That's according to ORA, the Orlando Regional Realtor Association. By comparison, in April 2021, it was $335,000. So they've gone up on average, the median price over $100,000. Nationally, the median home value is at $245,000. If we look at certain markets that we currently manage, Ocala, the median home value is $285,000. Palm Bay is $354,000. Kissimmee is $364,000. Daytona Beach is $258,000, and Lakeland sits at $335,000. 55.3% of the homes sold above listing price, and an average of 7 days on the market. And home sales dropped 7.3% from this point last year, and that may be due to interest rates increasing and becoming less affordable. According to Roofstock, the Florida median home values have grown 33% over the past year. Over the past 5 years, home values in Florida have increased over 78%. So for a lot of people we talk to, they're holding off right now to see what interest rates do. But if we look historically, right now the interest rates are just continuing to go up and up. We do have 1,500 people moving to Central Florida every single week, and 7 out of every 10 applications we get are from out-of-state residents moving here. So we've never seen that in the company's history. And statewide, 800 to 1,000 people are moving to Florida every single day. Over the course of the year, that's going to equate to the population of Orlando every single year. Speaking of interest rates, as of last week, June 21st, interest rates on 30-year fixed APRs were at 5.7%. In March, they were at 4.3%. And in January, they're at 3.5%. So they are continuing to rise. And according to the Wall Street Journal, on June 16th, the Fed Chairman Jerome Powell said that he expects another 0.5 to 0.75% increase come July. Higher interest rates lead to less qualified buyers, leads to more renters, which leads to a larger applicant pool and ultimately higher rental prices when demand exceeds supply. So from a property management perspective, we do well in recessions, always have. Just creates more renters for us. CreditKarma.com says that between the war in Ukraine, rising interest rates, supply chain issues, and persistently high inflation, consumer prices have risen 8.3% in the past year, which could lead to and will lead to higher delinquencies and bankruptcies. Per a broker friend of ours in Seattle, who is the largest property management company in Seattle, the recession has already hit up there. So it's only a matter of time before it comes down here as well. And if anybody does need a good property manager in Seattle, let me know and I can put together an email introduction. A recession is defined as 2 or more consecutive quarters of negative growth. So we're on the verge of that right now. And from clickorlando.com, according to iProperty Management, the national rental vacancy rate declined from 13.9% over the last year to 5.6%. So fewer units available means rental prices should continue to rise. And why are rents increasing so much in Central Florida? Obviously, property taxes increase, insurance premiums, coupled with not enough housing to meet demand and rising inflation. In addition, there's a large contingent of institutional investors that are buying up large quantities of housing in Central Florida. In fact, in Palm Bay, they bought up an entire neighborhood recently. So they control, once you have institutional investors own a fair share of the housing, they can help control rental prices, which are continuing to go up. One thing from our last webinar, bizjournals.com says that due to Orlando's red hot housing market and a shortage of homes, next year, Orlando will be less affordable than New York City. Didn't say more expensive than New York City, but less affordable, which is still pretty crazy. There are some groups currently pushing for rent control in Florida. However, Florida and her sister cities have no rent control ordinances. The only thing that prevents a landlord from charging whatever he or she wants is the availability of tenants willing to pay that amount.
Jason,
Yes, sir.
when you say less affordable
Yeah.
next year in Orlando, that means that the values of the houses are going to go up.
Well, the values are going to go up, but I don't think the rents are going to be higher priced than New York City because the cost of living is still less in Orlando than it will be in New York, but it'll just be less affordable for the residents here. It's going to put a strain.
Oh, but it doesn't mean that the value of the houses are going to go up.
Value of the houses will continue to go up, we believe. Yeah, probably not as such a steep increase that we've seen in the last year or two, but rental prices should continue to go up a bit.
Because I thought you said that the value of the houses have dropped about 7.3% from last year.
Sales, home sales, yeah. Not
Home sales.
no the
Oh,
number
home
of
sales, not the value of the houses, but home sales. Okay.
U-Haul put out a news release in which it said California was the state that saw the biggest loss of one-way U-Haul trucks last year. In fact, at one point, U-Haul actually ran out of trucks in California. The top destination for U-Haul's trucks were Texas, followed by Florida, Tennessee, South Carolina, and Arizona. According to the U-Haul Growth Index, Florida has 10 of the top 25 cities for growth, but Texas edged us out for the #1 spot. Average rents in the area, according to Rent Cafe, for Orlando, we're sitting at $1,820 a month. Ocala is $1,462 a month, except our new construction that we have in Ocala is currently getting $1,600 to $1,650 a month. Lakeland is $1,395 a month, and Palm Bay is $1,408 a month. But our new construction, their 4-bedroom, 2-bath, 1,710 square foot homes are getting $2,100 a month. So a significant increase there. And Tampa is sitting at $1,834 per month. You know, there's definitely a shortage of housing in the market, but our broker Tommy was able to secure 1,000 lots, and he has partnerships with builders. So if anyone would be interested in looking at build to rent, you know, there's definitely options available, and those options are really only available to our clients and our close friends as well. So he's not broadcasting this to the general public. It's currently a seller's market in Orlando with only 1 month supply of housing. We need to see a 500% increase before we hit that break-even point, because the market should have 5 to 6 months of supply of housing in the market, and we just don't have that. And Norada estimates that it'll be a seller's market for the remaining over the next 12 months. So why invest in Orlando? It's the 3rd most visited city in the US, 70 million visitors last year, behind only New York and Los Angeles. We do have 1,500 people per week moving to Central Florida, and Orlando's rents have jumped 25% on average since spring of 2020. Whoa, my cat. Go away. Clearwater-based Pods estimates 500,000 moves to Central Florida during 2021 and early 2022. #1 city was Sarasota, #4 was Tampa, 5 was Ocala, 9 Orlando, and 15 was Melbourne. Orlando is the second fastest growth, has the second fastest growth rate of the 30 largest cities in the US. ExplodingTopics.com ranks Orlando as 3rd in their 20 fastest growing cities, behind only Austin and Raleigh. The Orlando Economic Partnership estimates the Orlando region will add 1,500 people per week and reach a population of 5.2 million by 2030. Top 2 states with the most building permits. #1, Texas, followed by Florida at #2. Ocala is one of the big markets that we have right now for this new construction. So the question is Ocala growing fast? Ocala and Marion County are among the nation's fastest growing metros, with home construction up 42% last year. Marion County had the 10th fastest 1-year population growth rate of the 400 metropolitan statistical areas. It's the 5th fastest growing city in America. There's more than 50,000 residential units have been approved in Marion County. Construction has begun on a 1 million square foot warehouse in Ocala by Red Rock Development. They estimate this will bring between 6,000 and 8,000 jobs in the next couple of years. Currently under construction is a $30 million natatorium, which is indoor aquatics complex, and a $24 million charter school, which will bring 5,000 more homes on more than 1,500 acres. Florida Crossroads Commerce is building a 1,000-acre site. Trailhead Logistics is building a 943,000 square foot warehouse on 64 acres. And bestplaces.net predicts future job growth rate over the next 10 years in Ocala at 37.6%. So Ocala I invest in Ocala myself, and it's exploding. The big attraction there is the Villages, which is the largest retirement community in the world. There's a couple 100,000 residents there, but they just purchased another 8,000 acres. They're putting in 43,000 more homes. So they're gonna have to continue to build up the infrastructure, the amenities. There's gonna be more jobs available. So Ocala is a phenomenal area to invest as well. Another great place, and it's debatable which is better, but Palm Bay, which is rated the #1 place in the US to invest by BiggerPockets in 2020. And again, this year by US News, rated #1 place to invest. Milken Institute ranks Palm Bay as the #2 for best performing cities, emphasizing jobs, wages, innovation, and high-tech growth. And the main attraction with Palm Bay is that it's on the Space Coast. So you've got all the aerospace industries located really along the whole Space Coast, but primarily in Melbourne, which is the neighboring city to Palm Bay. So you got a ton of people coming here for these aerospace jobs, and they're primarily 6-figure jobs. So very qualified renters. Arion Corporation in the aerospace industry is building a $300 million headquarter facility in Melbourne, right next to Palm Bay, which is going to create 675 new jobs. Palm Bay is building a new marina project for 10 to 12 million. That's going to create 300 more jobs. General Development Corp is an aqua housing retail complex. It's going to have 320 units, 5 commercial buildings, retail shops, coffee shops, restaurants, breweries, and a dog park. Emerald Lakes is being built there, mixed-use master plan facility with 3,760 units, 2.8 million square foot of commercial space. And as I mentioned previously, our new construction properties in Palm Bay are right now getting $2,100 a month, and that's gone up pretty steadily over the last year and a half. According to US News, of the top 10 places to retire in the US, Florida takes 8 of the top 10 spots, including Pensacola, Port St. Lucie, Fort Myers, Tampa, Melbourne, Daytona, Naples, and Sarasota. And the top 25 fastest growing areas in the US, Naples sits at #9, Daytona at 8, Port St. Lucie at 7, Ocala at 6, Fort Myers at 4, Sarasota at 3, and Lakeland at 2. So there's most of those are actually in Central Florida in our market. So Disney's headquarters was planning on moving from Burbank to Lake Nona, which is a subdivision rather of Orlando. And I don't know if you've kept up with what's going on with Governor DeSantis and Disney, but they've got an ongoing feud. So Disney will still be moving here, but they pushed back that date to 2026. I don't know if they assume that DeSantis will no longer be in office, but yeah. So Disney is still moving here, it's just going to take a little longer. Developments currently in Central Florida. Enjoy Florida Online says that there's 5 communities being built called Crystal Lagoons, which are, and one of those is actually going to be in Palm Bay, but they're Caribbean beach life houses with lagoons, white sand beaches, and aquatic sports. So these man-made lakes, they're going to have communities set up there. And another development is Kruschbrau Park, which is a German theme entertainment complex, is going to come to Kissimmee this year. Billionaire Ken Griffin out of Chicago is moving his hedge fund from Chicago to Miami due to the high crime up there, but that's 300 employees. And Amazon is currently building out 6 new warehouses in Central Florida. And I do have a list here. There's a ton of companies that are relocating to Florida this year. From Red 6 to Benefit Technologies, Assured Partners, KPMG, SurePods, Sonesta International Hotels. They're all relocating here to Florida this year. So that's all I got on the market update. Any questions? Thanks for coming.